Hey, it's Bill Soriano from Pittsburgh, and I want to make a quick video today to go over Forex trading method that I've been using here. I wanted to put it in the group, Forex Trading Authority. And first of all, I want to say I hope everyone out there is safe and virus-free. It's a very difficult time for the country right now. I know. Make this video, try to give those of us that maybe are a little bit bored, stuck at home, something to do to take our minds off of what's going on in the world right now. And of course, I want to thank all those people that are continuing to work in the healthcare industry, restaurant industries, grocery stores, all those essential businesses. I want to thank those people for their service as well if they're watching this video. Although they probably won't be able to watch videos because they're too busy working all day. But anyway, here I wanted to show the trading method that I've been posting in the group, and also a new indicator that I purchased called Fibo Quantum, which uses the Fibonacci indicator to give you areas where you can take trades. So those of you who know me know I like to go by price action normally, but if there's one indicator that I'm kind of stuck on, that's the Fibonacci indicator, because you have Leonardo Pisana in Italy, the mathematician that came up with the Fibonacci sequence, and the whole thing's just very intriguing to me, so I like to read up about it, even outside of the Forex market, and how it relates to the universe and life. And so I like to find ways to use it in trading as well. So what we have here, I like to take trades on the hourly chart, and this is EJ hourly chart. This was a current chart until right about now here on Thursday, April 2nd, 10:03 a.m. So what I've plotted out here is I have three moving averages. These are three exponential moving averages, and I like to use these to determine the trend. Now we can look at this and we can see that it's trending down, obviously, at this point over the last several days. But I like to have something to use to determine the trend that's not up to interpretation. So that's why I plot three moving averages. I call this the mustard, the ketchup, and the water. So the mustard is the 20, the ketchup is the 50, and the water is the 200-day moving average. And I use those to determine what the trend is doing and whether or not I should look to go long in the market or short in the market, or just stay out of this particular pair in the market. So as you can see over the last few days here, let's see if we can make this a little bit, let's push this over here. So you can see how there was a period where it went up and then a period where it went down. So if you look at the 200-day moving average, kind of right here, you see that both the 20 and the 50-day cross, right here it's kind of moving flat, right? It's kind of like a flat market. And right here the mustard and the ketchup both cross the water here, so the 20 and the 50 both cross the 200, and then it kind of moves up. And as you can see here, right at this point here where the 20 crosses the 50, so all during this time here you're looking to take long trades. And then right here where the 20 crosses the 50, that's the first indication that the uptrend may be in question, right? So when I see that happen, I no longer want to take long trades with this particular pair. I don't want to take short trades either, because I don't know for sure that it's going to move into a downtrend. Because remember, the moving averages they don't tell us where price is going, they just tell us where it's been. Okay, so and you can't use moving averages alone for a trading strategy, because you'll get whipsawed too many times and lose money. So but if we're just right here, all we know is that now that long-term trend is in question, that long-term uptrend is in question, and as we see here, it does continue to move down, and then eventually both the 20-day and the 50-day drop down below the 200-day, which now tells us that it's time to take the short trades. Okay, so from this period here to this period here, we're looking for long trades. From this period here, to this period here, we're not looking to trade this pair. and then at this point right here where my cursor's at, that's where we're looking now to short this pair. Okay, so like I said, you just can't take trades based off of moving averages, so you need something else. So one trading strategy that I developed was trying to find an area of value, and then looking for a particular candlestick pattern in that area of value to tell us that price is going to move one way or the other. So if we go to the group, I can show you this a little bit better in the group, where I put most of the trades. Of course, in the group here, I put the link here to Fibo Quantum, and also if you get this, we'll be able to use it together. And here's the link to get the product, and we'll be able to then use it together so that we can post in the group here. Okay, and if you look at some of these trades we took here, so right here, this particular trade right here, wait for this to load here. So this particular trade, it's taking too long to load here because I'm making the videos, but right here, what you see is this green candle here. This was in a downtrend, right? It was overall downtrend. You see both the 20 and the 50 below the 200 day. Then we get this candle right here that is kind of like a shooting star. I call it a shooting star-like candle. It's not really a shooting star because the body is too big, but you see the wick here going up, and this candle is on both of the moving averages, both the 20 and the 50-day moving average. And this particular shooting star type candle is a bearish candle. Okay, and that tells us that the price has a good chance now of moving downward from here, because we've identified the trend. The trend is down, right? And we have a particular candlestick pattern in an area of value. And the area of value is this area between the 20 and the 50-day moving average. And we see that this candle, like we said, if you count the wicks, the body and the wick of the candle, it is on both of those. So you're looking for a candle on both of the moving averages, and you're looking for, because also that's a time where the moving averages get closer together, right? Because candles aren't usually that big. In a really strong uptrend, if you get a pullback, you're not going to want to take that trade, until it's touching both of these moving averages here. And with this particular trading method, you're looking for a pullback, right? So it's in a downtrend, you're looking for a move back up in a downtrend, and then you're looking for it to continue its trend downward. That's exactly what happens here. Now, like I said, this is a shooting star-like candlestick. It's not really a great indicator that it's going to move down, but I did take the trade whenever the low here, whenever this candle here went through the low. And then what you see is this candle here, the next candle, ended up being a bearish engulfing candle, which is another candlestick pattern, bearish candlestick pattern that tells us the price is probably going to move downward from here. So we did take that trade, and that trade was good for almost 100 pips, or no, almost 100 pips. Okay, and that was a 0.5 lot size, and this is on demo, guys. Okay, so this is on demo, so it was a 0.5 lot size. So there's a lot of these trades here, and again, right here we see, I'm sorry that I can't expand these and make these bigger, because there's just a problem with the internet here when I'm making this video. Anyway, we see this is in a clear downtrend. Here's the 200-day, the 50-day, the 20-day, right? So the 20 is below the 50, and they're both below the 200. And then we look for a candlestick pattern in the area of value. So the area of value is this area here, and right here we see another shooting star. You see the small body and the big wick going up above the 50-day, and the shooting star is touching, when you count the body and the wick, right? The whole candle, the whole candlestick, it's touching both the 20 and the 50-day moving average. So that's the area of value. That's what we're looking for. That tells us that this now has a good chance of moving lower after this little bit of a pullback in a downtrend. And it does move lower. So this was the first trading method that I started posting in the group here, a few weeks ago. And basically, it's just you're identifying the trend. You're looking for a pullback into the area of value, right, against the main trend, and then you're looking for the trend to continue then in the direction that it was going. So that's the whole basis behind this. And then, if you're going to use this is the what we call the signal candle. The next candle is where we got in the trade whenever the low of the signal candle was broken, since this is a short trade. And then we would use that signal candle for our stop loss. We would go a little bit above the wick of this signal candle for a stop loss, and then we would use that amount to identify how many pips we wanted to get on the down as well. So, and I've used this method on quite a lot of trades here. I actually have a trade diary here. Let's see if I can pull this trade diary up. And all the charts for these trades are in the group here. But as you can see with the trade diary here, this was starting back on February 10th. Let's see if I can move this up here. This was starting back on February 10th over here. And you can see the trades. And then what I do is I wait till the end of the day after the trade closes, and I mark down where I got in. I mark down what was the maximum amount that the trade went against me. So in this case here, this was a long position in GN, February 10th. That was the entry. It dropped as low as that, so it dropped 36 pips below the entry. My stop was further down than that, obviously. I didn't get stopped out. And the maximum gain was actually 128 pips above the entry. And on this particular trade, I ended up getting out with a 9-pip gain. So you see 9, 12, 19, 6, then you see a loss of 32 pips, then 4, a loss of 18, 15, 35, 53, and 95. So out of these trades, there's only, 2, 4, 6, 8, 10, 11 trades. There's 2 losers and 9 winners. So it's a pretty good percentage. And if you look at the overall pips, that would be good. Look at the last trade I took on 330 that I showed you. I ended up getting in here. It went 82 pips against me, so the stop was far enough away based on that signal candle that I didn't get stopped out. So it never went up above that signal candle from where I got in. And then it moved actually for 189 pip gain. By the end of that day, I ended up getting out with 95. So this method of identifying the trend, looking for a pullback into the area of value, which is the area between the 20 and 50-day moving average, looking for a candlestick pattern, or one individual candlestick in most cases, that touches both the 20 and the 50-day moving average and is a strong bearish or bullish indicator that the market is now ready to move back in the direction of the trend. So that's basically everything about that. And if you need clarification on that, just send me a message here in the group and I can further explain that to you. But anyway, now the thing is, like I said, that's one trading strategy, and for the most part, I was finding trades for that trading strategy because I was at the restaurant all day, and we did have to close down our restaurant because we're in an office building, so there's a lot of businesses in that building, and normally there's about 380 cars in the parking lot, so we're very busy for breakfast and lunch. But once all the non-essential businesses were forced to close, there's only a couple businesses, so you have maybe 10 or 15 cars in a parking lot that used to have 380 cars. So we just didn't have any business, so it made more sense just to close down at this point. But normally, I would only be looking for trades during the Asian session, or more likely the Tokyo part of the Asian session, I'd like to say. So around 8 p.m. I would start looking for these trades on Eastern Standard Time, and I would be up till maybe 10 or 11. So most of these trades were coming in between 8 and 11 Eastern Standard Time. So that's when I was finding these trades, because that was really the only time I had to look. Of course, now I have more time because forced to be at home and stay in the house. So now I can watch all three of the major market times, the London session, the New York session, as well as the Tokyo session. So I want to show you just, if we go back to this, let's put this back on bigger here. Boom. And then if we can now go to a chart that has the Fibo quantum indicator on it. So also one thing I forgot to mention on the other chart was these little white boxes here. These are the times of the day when I wouldn't want to take a trade. So basically, once you hit 12 o'clock, 12 noon, that's when the London session closes up. You still have the U.S. session running, but it's very weak volume at that point. So I don't like to take any trades for an 8-hour period during the day. Of course, Forex runs 24 hours when it's open. And so I don't like to trade from 12 p.m. Eastern Time until about 8 p.m. Eastern Time. So that's what these white boxes do. So if I'm looking back at a trading strategy and I want to see if something was effective, I know by these white boxes that I wouldn't have taken a trade, because that was during the 8-hour period when I don't take trades because the market is too weak. Now, if I'm already in a trade, I'm going to stay in it, obviously. But I don't take any new trades during this time. 12 p.m. Eastern Time to 8 p.m. Eastern Time. Okay? So, when you look at this now, and let's see, if we can go back here to that first uptrend. So here's where we seen, the market was kind of moving sideways. Then we seen the 20-day and the 50-day both cross over the 200-day. So that tells us, let's start looking for buy entries. So what Fibo Quantum does is it'll give you the trading signals, and that's what these lines are here. So here's a buy entry right here. Down here is a sell entry. So the difference now, normally with the Fibonacci indicator, you're looking at the trend and you're looking for a retracement, like a small pullback in the opposite direction of the main trend, and then you're looking to get in now at that point, and you're looking for the trend to continue. The Fibo quantum indicator doesn't use the retracement. It's just using the Fibonacci sequence, right? It finds the areas where it makes sense to buy and the areas where it makes sense to sell. And in this case, this is where it's at. Now, you see the length of the line here. Okay, so in this area here where there's no line, there's no signals. So you have to take your trades when these lines paint. And by the way, this indicator does not repaint. Mostly all the indicators out there will repaint. So you can't go back in time to see what would happen because they're different than they were when you were looking at them in real time. This indicator does not repaint. So this is exactly how it looked back here on these 2 days. And here we are in Thursday. This was Wednesday, Tuesday. Where are we at here? Right. So this is going back a few weeks, a week or so ago. So right here now, you get a buy signal. Okay, so right here on this candle, you're looking at this in real time, right? You see that this price goes above the buy entry. That's when you want to take the trade. Okay, so what are your rules for taking the trade? Well, you want to make sure that you're not, outside of the time frame where we like to take trades. That's what this white box indicates here. So we're not during that time, right? And then you want to make sure that you're trading with the trend and that all three of these moving averages are in line. Okay, so for a buy, you're looking for the 20 to be above the 50 and both the 20 and the 50 to be above the 200. And that's what you have here. Okay, so you would take this trade. Now the stop loss, the buy stop loss is down here. So you see this line here is a sell stop loss. This is for if you were going to take the sell entry if price moved down here. But since we're taking the buy entry, this is where we set our stop loss. And then what happens is, if we can see them here, you also get take profit areas. See? You'll get 3 take profit areas. The indicator will give you 3 take profit indicators where you can set your take profit. Okay? Or you can do it however you like. But the thing is, you want to make sure that your stop is outside of the normal market movement so you don't get stopped out and then it goes ahead and takes off. So in this particular instance here, you would get in the trade right here, okay? And what happens is you can see that it moves up here about 118 pips. 120 pips. Now that's a little bit short of the first take profit area, but you know, for me guys, if I'm up 50 or 75 pips, you know, I'm going to think about, you know, closing that trade because I don't want to give away that much profit. Now if I don't close the trade, then I would look for an area, you know, somewhere above my entry, maybe 10 or 20 pips above my entry, so that if price does happen to turn around and go back down, I'm going to at least get out with a 20 pip gain, right? So once I'm up by 50 pips, I want to lock in at least 10 to 20 pips, depending on how you know, good the trade is going, okay? Because I don't want to take a 123 pip gain here, and then what happens here over the next couple days, you see it drops down here, and you know, eventually you'd get stopped out at a loss a few days later. But that's not going to happen because we're going to use strong money management rules, and we're going to know that once we're up by 50 pips, we're going to lock something in. You know. Now, the only problem is with that, you know, if you look here, right here, you know, you go up by 50 pips, you know, let's say you lock half of that in, you know, right here you're going to get stopped out with half of it. Okay? So, you know, you have to come up with your own number. Is it 50 pips? Is it 75 pips? Is it 100 pips? You know, maybe when you're up by 100 pips, we lock in 50, right? And then we let it run and see what happens. See if it gets to the first take profit level, you know. Then if it gets to the first take profit level, right? You know, then we might want to lock in that and then let's see if it runs to the next take profit level, right? Because it's going to give you 3 take profit levels. And also when you're looking at this live guys, and this buy signal, you know, happens here, you're going to get notifications when you set up the indicator correctly. You're going to get notifications not only here on your computer if you have it open, but I also have it sending an email to my phone. That way, no matter what, if I'm not at my computer, if my MT4 isn't open on my laptop or on my phone, I have it set up to go to my MT4 on the phone as well. But if they're not open, the fail-safe is that I'm going to get an email notification to my phone, and that's going to tell me that there's a trade I have to look at, you know, on my charts. Now, the only downside of that is if the price then moves down below where the signal is, right, and then moves back above, you keep getting multiple signals. But you'll know at that point, you're only going to get in one particular trade one time, right? The other thing I wanted to show you guys while I'm talking about that is when you purchase this indicator, it does come with a PDF file here, which I'm going to pull up right now. And that, you know, PDF file shows you how to set up the indicator, tells you how to set up the notifications I just told you about. But it also gives you a lot of rules. It gives you like the rules for taking trades, and that's kind of what we're talking about right now. But everything that you need is in this you know, PDF file. Now the one rule is that you want to stay with the global trend. That's one of the rules here. You know, when we get to the rules part, you want to stay with the global trend. You want to check the news, right, to make sure that there's no upcoming news right away on the pair that you're trading. You know, it gives you a link to check the news. You don't want to risk more than 1 to 3% of your capital on any one trade. You don't want to lose more than 10% of your capital in one day. When you gain 10% of your capital, you want to quit trading. That's it. Stop trading so you don't lose anything. So there's rules that it gives you here for taking the trades. And there's a little bit, and what I did was I took those rules and I added a little bit more to them so that, you know, I would be sure that I was getting in the right trade. You're not going to win every trade, guys, but if you follow the rules that I tell you here, for this indicator. You know, you want to make sure you're in an uptrend, and then you get in. So there's a winning trade there. Now, at this point here, this is where the indicator, you know, the moving average tells you that the uptrend is in danger. So we just don't want to take any trades at that point. We do get a sell entry here, right? But we don't want to take that, even though that it is a pretty good trade. It moves down, you know, it moves down 72 pips, so you would have got some profit there. We don't want to take that because at that point we're just not sure that it's really going to switch into a downtrend, right? Now here, so we would let that trade go. Then as we come through here, we now see that, you know, first the 20-day drops down through the 200-day. So now that's a stronger signal that the market, the uptrend is over, and we're probably looking at a downtrend now. Okay? We still want to see this 50-day drop down below there as well, which we get right here. And this is where these sell signals then start coming in. Okay? So right here, as you see, we wouldn't take this trade, even though it was a good trade. We wouldn't have taken it based on our rules because, you know, during this period here, we don't want to go long or short. Then right here, okay, right here where the 50-day does cross the 200-day, and then right here on this candle, it goes down through the sell entry. So you would get a signal to your phone on the computer here that there's a sell trade for EJ. Okay, so we look at the moving averages, right? For a sell, the 20 days below the 50, and both the 20 and 50 are now below the 200. So we would take that sell. Our sell stop loss is right here, and then it shows the 3 take profit targets, right? And if we scroll through here, we see that it comes down. You get a little bit of a pullback, because remember, that normally happens, right? You know, as you're in a downtrend, you're going to get pullbacks. You're looking for those pullbacks, though, in a downtrend to create lower highs, right? That's what happens here. But because our stop loss is up here, we don't get stopped out, okay? Anyway, this move really only goes about 20 pips against us, and then we get the big drop, guys, right through take profit 1. Again, you get to take profit 1. If you said, you know, like we said, or when you're up by whatever, take profit 1 or 75 or 100 pips, you lock in about half of it, never comes back up. Then you come down here, you get to take profit 2. Now take profit 2, you can then move your stop up here and lock in at take profit 1, right? This one moves all the way down to take profit 3, guys, and I'll tell you, at 170 pip gain, I'm probably out of this trade anyway. You know, I get 150 pips, I'm probably out. What happens is then you get the pullback. You're going to get a pullback, right? And it moves up here past take profit 2, so if you just set your stop here, if you didn't actually get out there, you would have gotten out of take profit 2. Then it moves all the way down further for a total drop of 232 pips. So I wanted to show you, you know, first of all, I wanted to show you the trades in the group. And like I said, in the group, move this here. If you look in the group here, go to the group, Forex Trading Authority, right? You're going to see, you'll see a bunch of charts here from February and March. And these are all trades that I took, you know, using that area value strategy, where I'm looking for, I look at the trend, I'm looking for a pullback into the area value, then I'm looking for a candlestick pattern that's bullish or bearish that tells me the main trend is now going to continue. So you want to look at those guys and check those out, and I'm going to continue to take trades using that strategy as well as this Fibo quantum strategy, and I've taken some trades today. I already won one trade, and I have a couple more trades open right now. But I wanted to make this quick video just to give you a quick introduction to this. I don't want to make it too long. I've been on for about 30 minutes now. And so I'm going to make some more videos probably today or tomorrow giving you some more examples using this Fibo quantum indicator. But really what you want to do is you want to get back in a group. You want to purchase the indicator, you know, guys, and you want to, you know, start taking some trades and post them in the group with me so that we get a lot of information into the group for people. Now, the link to the indicator is there, so you want to go there to purchase it, and then I'll see you on the next video, guys. Have a great day, and please, if you don't have to go out to work, if you're not in one of those essential categories, stay in the house, stay safe. If you do have to go out to work, God bless you. Take precautions as best you can, and stay safe as well. And thank you for your service. Again, Bill Sawyer from Pittsburgh. Make it a great day.